Welcome to the Skadi podcast. We are talking today about prediction markets and looking at two markets providers, Kalshi and Polymarket. Why are we looking at these? Well, January the 6th, the US began their operation to capture the Venezuelan President Maduro. By the 7th of January, the media are reporting that contracts placed on two prediction market exchanges, Kalshi and Polymarket, relating to the US invading Venezuela were not resolved. The beginning of 2026 has been so chaotic, unpredictable.
Yeah.
To sort of, in a word, we have ongoing activity in Iran. The Venezuelan situation remains uncertain. You've had, tense exchanges, or even worse, but someone's lost their life in Minnesota, and then you've had controversial earnings calls as well. So I think it's definitely a good time to talk about prediction market exchanges. And DT, you really put me onto this, Damian. You've been looking at this, been very, very interested about it. So what is a prediction market exchange? And I think we've got to be really clear on our terminology. I'm going to pull you up because it's going to be so easy to get to drift into other sort of loose language. But
I need to
prediction market exchanges. What are they?
Well, I suppose in a way I'm now probably going to fall right into that trap by saying they're quite like Betfair, which probably doesn't necessarily help people. But they're an exchange. The outcome of the bet that you would take, or the prediction you would take, is a binary outcome. So it either happens or it doesn't happen. So what we'd say would make up 0 or 1. So if you think something is likely to happen, you can buy it on these exchanges at somewhere below 1. Probably be. I think they normally quote in cents, and it's saying actually it finishes at $1. So you would buy something at, let's say, 60 cents, and if it came to pass that at either the time or the event itself occurred, you would make the difference between where you bought it, 60 cents, and the dollar. So you'd make a 40-cent profit. And these markets, I mean, we've mentioned, or you've mentioned two, Kalshi and Polymarket. There are a lot of others out there, but these two seem to be the big guys in this space. And
so you mentioned there that if you think it's going to happen on this example market you had, that you could buy it at 60.
Yes.
If you didn't think it was going to happen, if you want to take the other side, where would the market be if that market was at 60? Where would the other side of it be?
Well, it would be there's an actual order book. It's very much like an exchange. So you would sell it at 61, or you could cross to sell it at 60. The market on the exchange would be 60 at 61.
But that's the you think it's going to happen side. But Correct. If you don't think it's going to happen, so the converse side would be
40 cents,
40 or 41. Because what I'm getting at is the take by Kalshi and Polymarket is effectively 1% on all bets.
Correct, yeah.
Or sorry, prediction markets.
Predictions, not bets. Yes. So, and in fact, I think, there are two ways to look at it, as in there might be two lines, one that's going to be a yes and one that's going to be a no. And in fact, they are both mirror images of one another. In other words, you could buy it at 60 to make up at 100, or you could, in fact, buy it at 40 to make up at 100 if you think it was going to be no. But likewise, in fact, you could sell it at 61 on that yes market, and sell it at 41 on the other market to make up at the other end. So it's either 0 or 1 on the final makeup. But yes,
people are effectively, what you're describing is people are actively out there looking at situations that they think may or may not happen, and therefore taking advantage financially on them. So prediction market does what it says on the tin. And what was so controversial about the military, or even whether I even should say military operation, the operation to capture Venezuelan President Maduro, that led to the prediction markets or contracts placed on the US invading Venezuela not being resolved.
Correct. Yeah. So
and that's down to the semantics,
the semantics of the
or the
small
nitty
print.
gritty, if you like.
Yeah. Of what, and I, it is, in a way, it's an interesting one. It's quite a, yeah, it's a woolly description, and they may find that in future they need to have much more of a clear definition. And if we had a quick look at these markets earlier today, at the bottom of each market is a description of what it is. Now, going back to when I said these things are quite like Betfair, for example, in a sport, and that just covers that covers sporting events. That there's it's either a win, lose, or draw in most sporting events, and you can bet on multiple things around it. And they will pay out on those. And so I was told you earlier, in the case of a cricket match for our UK listeners, that can actually end in a tie. Very rare, but on a test match, you can play for 5 days and it could be a tie. There is a line that says, in the event of a tie, all these bets are void, and we will just return everybody's money to everyone, and then we'd move on. But there is, because in a sporting event, there's a very clear set of what the final outcomes can be. It's very easy to structure a market around this. Now, the issue here is obviously, was that technically an invasion or not? Now, a lot of people, when they'd seen that it was going on or it had occurred that the next morning for us here in the UK, the market might still have been open, and people are like, well, this is mispriced because there's been an invasion. So even though after the event you can still almost trade this thing, and they've obviously, people then bought that saying, well, thinking there's been an invasion, and those bets have been voided. But in fact, I mean, sorry, you carry on.
No, I think that's fair. It's fair to say. So it's, this was what sort of was drew our attention to it, because it's really that kind of semantics, and we're used to that in finance, because you have, I mean, we talked about this, I think, probably 18 months ago when we were looking at credit default swaps and determination committees, and looking at some of the controversial kind of termination events that had occurred, where you'd had bondholders finding that they were holding CDSs, and then there were kind of technical defaults.
Yeah. Has it been triggered or not?
Exactly, where triggers hadn't been happened. And again, it's all about reading the small print. But people are kind of, I think in a market of professionals where people are used to, documentation risk, it's one thing. In the retail market, it's a lot more difficult.
Yeah, there was a classic. Sorry to interrupt. There was a classic on these prediction markets, whatever it was, 2 months ago, a month ago, when we had the government lockdown. You could take a prediction market on when the lockdown, the government shutdown, would finish, and actually, what was happening is that it was then known, for instance, that the shutdown ended on the 23rd. But even when that has been announced, the official shutdown ends the next day. So what was happening is people were going, well, hold on a minute, this market's still live. I can still buy this market at 90 to get my 10 cents, which is free trade. Not looking at the small print, then in fact, even though the shutdown has been called off, it's not actually going to make up till tomorrow. And because you're not dealing in a regulated product per se, you don't have any real recourse the next day to go, hold on a minute, I'm buying this thing, it should be making up at 100. And the problem is, if you're taking what you think is a sure bet, buying something at 90, or dare I say even 98, 99, to go, well, I'll just take that tiny profit. Well, actually, your downside is all the way back down to zero. So it's going to, when it comes in as actually, no, technically the shutdown occurs tomorrow, as in the end of the shutdown is tomorrow, then obviously you will have lost money. But do you have any recourse on that, apart from someone going, well, you've got to read the small print? So as you say, we're very much used to that in finance, and documentation risk and everything, and pouring through all the strange, weird clauses that can get triggered if a certain event may or may not occur. These are mean, I would say they're nascent markets. They're trading billions of dollars now, but
Yeah, I know. So it's really seductive. I went on to, I think it's Polymarket, which is the one that is on the Polygon blockchain.
Hmm.
And, it just says, how does it work? And you press a box and it just gives you, there's just three little information boxes, a couple of lines, just saying, how it works, and it's off you go. It's just so, marketed well because it's deliberately meant to be so easy. But actually, you can see how difficult things could get very, very quickly, because one, the as you've pointed out, the kind of looking at reading not even the small print, just not understanding the technicalities, and there are, it's a bit like we've said about eToro. There is, with all these markets, because they're trying to drive engagement, there's the opportunity to comment as well. And some of the comments are getting quite heated that, it's just becoming ridiculous now. This is all just, these people are dealing in semantics and so on. So people venting their frustration on that. But it is of course, an invasion. That's a legal question, as to whether it's an invasion, and that's got all sorts of ramifications. So I can understand that, but I think it is a fascinating area and market, and it is a market. I think that's what interested me, because the level of information on Polymarket, certainly, I've not looked so much at Kalshi, but just looking at individual markets, you could see the entire order book. So it's just like, when we were looking at SIAC back in the days, or SETS, when you and I were doing the UK all those years ago, and you can see, what is the build up of positions and where liquidity is on the book. You can trade in running. You don't have to hold your position to the end. So it's not like, going to a horse race, going to see the bookmaker. You take you place your bet at whatever 5-1, and that's it. You've got to wait until the end. Obviously, this was an innovation where things like Betfair came along that really revolutionised the way people betted, certainly in the UK. But it's the same thing here. You're getting to trade in running, so things are changing. So you can imagine something with a long lead up time, like who will win the US election, the next election, which is probably a very active market for a long time. That there's so much turnover potential in these markets, and then because of course it's a blockchain, you've got every individual trade on the screen that has taken place. All right, it's anonymized in terms of it's just the username, but you've also got who are the biggest holders of the positions. So you can see so much information. But you were telling me about, I think it was on this Venezuelan situation. Maybe it wasn't Venezuela, it was something else. But paradoxically, while you've got all of this information, someone managed to place a bet,
So I mean, this is covered.
Bet, doesn't matter. But they managed to take a very, very quick profit on something that was controversial, and then effectively disappear into the ether. How did that work?
This was, I mean, the initial thought on our, for this chat was I'd seen a headline about, Polymarket had cancelled a market on a technicality of whether it was an invasion or not. But actually, there's a second story here, which actually has been covered by places like the Wall Street Journal, which was an account was set up 2 weeks before the Maduro capture, and someone took someone put a $30,000 bet that on the market, not on this market that was cancelled, on a separate adjacent market, about would Maduro be captured as the leader of Venezuela or whatever it was. It was a $30,000 bet that paid, and he would have traded at around 10-15 cents because it paid out $400,000. So it was a well, it sounds very much like an insider bet. And then the account had been set up, bets were put on, and then another, I think, doubling down bet happened very close to when this was going to occur. And then it's been paid out $400,000, and then that money has been squirreled off through various contracts and then through various mixers. So no one knows who'd had that account. And obviously, even though you can track where funds flow from one wallet to another, they've gone through various mixers and stuff. So you can't tell where this money has ended up. So it's sort of
so people listening to this, we'll hear you talking about mixers and wallets. The point is that on Polymarket, certainly you can invest in cryptocurrency if you want to.
Correct, yeah.
And that's alongside normal currency. So that will enable people via the routes that you've talked about to really cover their tracks.
Correct.
Potentially.
Of ownership.
Or we foresee that. And it's such a paradox, isn't it? You've got all this detailed information on, positions taken and so on, and then you've got, again, the age-old problem with cryptocurrency, or the age-old risk, where it does seem to be, untraceable. People can get out, hide their tracks, and so on. So that's these are all things that interest us on this. We've obviously had, I think, the last few days. The investigation into Jerome Powell at the Fed. There was also a controversial situation with Coinbase. Did you see, or have you noticed any markets on Jerome Powell?
I mean, there's lots out there. I think the date. Will he be forced out by the end of Jan? I think, and such the markets that we've seen, but there's multiple ones out there that have been set up to you can take a bet on almost anything these days.
Yeah, and the Coinbase situation was particularly easy, Damian. What was that? Talk us through that.
That was an earnings call by Coinbase, and then at the end of, I think this was back in November 25, so just towards the end of last year. At the end of his spiel, he then sort of rattled off.
When you say his, who's he? Who's he?
He's the CEO, I think, of Coinbase. I'm not sure.
So the chief executive of Coinbase on an earnings call.
Yeah, rattled off sort of 6 random words, and it turned out that all these words you could have taken. There's something called a mention market that has been set up, and you can see it actually. I think there are some already for up and coming, big earnings calls. I think Netflix might have one, for instance, if you look on Polymarket. And there's a list of key words. And if these words are said during the earnings call, you get a payout. It sort of takes me back to our City days when you get an analyst going up on Bloomberg TV and you'd give him, before he went off to the studio, you say, let's see if you can slip this word into your talk. But obviously it's different. There's real money changing hands. So the fact that he said these 5 different words triggered a payout. I think I think it was an 84. It wasn't a huge market. $84,000. I think they reckon was paid out. But it does show you that obviously he was aware of it, and I think he tweeted the next day or that afternoon. I just.
So you've mentioned the Netflix one, right? So I've found the market here, and it says that the market will resolve based on the next earnings announcement of Netflix, currently scheduled to take place on January the 20th, 2026 at 4:45 p.m. Eastern Standard Time. And if you look down the list of what will Netflix say during the next earnings call, the first thing on the list is acquisition. But the second thing is Stranger Things. I mean, it's brilliant. I mean, these are brilliant markets, but what is it? It's almost the kind of the converse. You've got I think on the Coinbase story, he was kind of passed a note by someone saying, "Oh, just say these words."
Yeah. You
can imagine now the dilemma. It's not even a dilemma really for these people. They shouldn't be influenced by this stuff, but I can see the influence. Will the chief executive of Netflix come to the call, knowing the power that he has over saying, or they have over saying Stranger Things. I think I saw something else, talking about going back to the semantics on, where the immigration didn't pay out for a particular prediction market, mentioning immigrant, but immigrants would pay out. It's things like the semantics are really quite, they are there. They're very real. Other things on there, just the word profitable in the Netflix earnings call. is a market. You can buy it at yes at 95 cents, buy it at no at 88 cents. So there's some very, very interesting markets out there, very interesting words. Hollywood, gaming, subscriber is a word.
But yeah, I mean, the whole thing is, and as we talked about offline before we started, it's ripe for insider trading or insider type knowledge. I'm not just talking about finance. I mean, there are a lot of financial markets we've looked up there, but certainly government insiders. Obviously, the Venezuelan story could have been someone with access to the Pentagon or whatever it would be. But that's a lot of money. Someone's made $400,000 on a $30,000 bet within a few hours with some, well, one would think, or looks very much like insider knowledge. And this is obviously a big problem. I mean, there is some regulation that sits around these markets. Kalshi has a CFTC. It's covered by CFTC and Polymarket, having been fined a while back, recently brought a broker, and so it's coming under CFTC remit. I'm not sure if it's all the way through yet. I think it's sort of being watched. But there's certainly for the sort of work that we do to do with compliance and audit and stuff. There's a big risk around these sort of things, and I wonder if they're even aware of. I mean, I'm sure possibly compliance departments are aware of these things, but there are personal account dealing rules obviously within a bank, and that is you would give them the details of your brokerage account, and you would have to get permission before you bought or sold, and there would probably be a 30-day holding period if you traded in equity. Well, these things, which seem to be a complete way around a complete way of getting around this, especially if you have no traceability because it's done through a anonymous crypto type account. So there's real risk that lies within this that I'm not sure is being fully understood, and not just in finance, but also in government. There's people that are privy to information that it's not like the earnings are going to miss or hit, or we've got a new product that's come in, etc. There's real risks here.
Yeah, there is. I mean, these markets on words, it's kind of. I mean, I find them interesting and it's fun, and you can see the kind of the problems there. Obviously, banks are listed companies, and they will, their chief executives and their chief financial officers will have things to say, so they can be affected by this. But some of the other markets that you and I were looking at, we found one today, Hang Seng up or down on January 13th. Now that is, as a trader, that is a market or a prediction market that you can influence, and you don't have to be a very particularly, big book within a bank, I think, to do that. It's all about timing. That particular market is literally whether the closing print is higher than the close the day before. So it's all the good, the usual stuff of banging the close and these kind of techniques. But the point is, it's not so much just the fact that the guy on the convertible bond desk that's using the Hang Seng index to broadly hedge his Asian book, which, I had a position in the Hang Seng future when I was trading Asia. Asia is a hard market to hedge. So I would have had a big enough axe to certainly, do things at the close. But here's a clear motivation for me to do it. But it's also not clear probably to the people in surveillance on the dealing floor or in compliance as to why I would be doing that, because there would be no. It's not like I hold a binary on my book, which is really transparent and monitored, and people are very aware of the risk. Nobody knows, as you pointed out, that I could have a position in the Polymarket prediction market of whether the Hang Seng closes up or down today, and that's the thing, as you say, with the personal account dealing. You and I, as we do go work and work on projects, whether it's investigations or helping audit or compliance reviews, we sign up to the bank's personal account dealing policies, and we declare outside business interests. That there is no, I've never seen, and worked at the few banks. I can't recall any ever being asked to declare anything other than a brokerage account, whether I should declare any other type of account. And these markets are becoming so popular and prevalent. You kind of wonder whether this is something that people need to address now.
Yeah, I mean, I think I recall seeing sort of contract for different type stuff, which would cover maybe if you had a spread betting account somewhere. But no, absolutely not on this. I mean, maybe you would go, it would fall under the catch-all term of a derivative on a financial product. But yeah, no, I would agree. I think it's
it's a clear breach of policy. You have the conflict of interest policies. It's clear conflict of interest. That's all fine. I don't think there's any query as to whether this is somehow some way that you can circumvent stuff. No, absolutely you could not. But the point is that I think the controls are behind or need to get up to speed on this stuff, because otherwise I think there is a miss or potential for miss around this stuff, and it's those kind of markets, and the breadth of markets out there are so widespread. Thinking about the other areas that we've talked about, the investigations. I don't know. I've not looked, but could there have been markets on Epstein or related to Epstein? And pretty much all of the banks have been doing investigations into Epstein and continue to do them as they get to ask more information from the US authorities. Investigation staff, would they have privy to information that they could exploit on Polymarket, on Kalshi? How would their compliance department know that they were doing that? Because again, the focus would be around what people are doing in the front, on the trading side and the markets division. This isn't, the things that we're talking about are not new challenges. Actually, if you look back on, just looking back on the internet, I found, update letters from the FCA, or talking about this risk in 2019 of people using spread betting, and the amount of financial markets that are out there, and how there is a lack of an ability or inclination to capture that information. But I think this is now the interest in these two things in the US, and how that's kind of revolutionized what's happening out there, really kind of supercharges the need for people to look at this stuff, and really get to grips with it and get to understand what are the potentials for problems as a result of the rise in popularity of this stuff.
No, I think billions are trading through these things now. They're definitely a big. Obviously, since the deregulation of gambling in the States, there's been a big push into these markets and many other sports type betting markets. But it's definitely an issue that people need to be aware of.
Yeah, well, fascinating topic, Damian. Really one that I think we possibly will return to, but certainly until you raised it, I had just had no idea about this. Been really interesting looking at it. And what a great suggestion for us to cover as a topic at the beginning of a very uncertain 2026.
Yeah, I think that's one word. That's one word that will be on the bingo card. Uncertain.
Yeah, well, maybe we'll have a market on what Nic and Damian will say in the Skadi podcast next episode, but we'll see. All right, thanks very much, Brilliant. Damian. Great to catch up with you, and thank you everyone for joining us on the Skadi podcast.
Thanks. Bye.